Fed Chair Jay Powell's prepared House testimony for later this morning is out. Steve Leisman is back with us. Hi, Steve.
Good morning, Joe. Fed Chair Jay Powell will say before the House Financial Services Committee it is likely appropriate to raise the funds rate at the Fed's next meeting coming up in a couple of weeks. He says tightening a policy or removing accommodation will include reducing the size of the Fed's balance sheet. He says the effects of the invasion of Ukraine on the U.S. economy is, quote, highly uncertain, and the Federal Reserve will need to be nimble in responding. So no hint either way of what that means for policy. Inflation is running well above our long-run objective, Powell says. Supply disruptions have been lasting longer, have been larger and lasting longer than the Fed anticipated. But he does expect inflation to decline over this year. Reasons for that decline are easing supply constraints, moderating demand brought on by fiscal stimulus, the declining fiscal stimulus, as well as tightening of monetary policy. He does say, however, that the Fed is watching for risk for further upward pressure on inflation. On Omicron, he says the slowdown seems to have been brief, and the labor market is extremely tight, and they're seeing improvement across all kinds of different industries. So, Joe, I think at the end of the day, this is pretty much what is expected here. The Fed is on track for at least a couple rate hikes at the beginning, and then it's a kind of wait and see on Ukraine and the Russian invasion and the impact on the U.S. economy.
8:30. It's not the end of the day, Steve. We're right at the beginning of the day, right? What?
Fair enough. Fair enough. I should know better than to use language sloppily with you.